Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock related queries. So before we start, let's have a quick look on the markets are up to. So Cheryl, a good day coming in, rather the first trading day of the week, and we are still holding on to the good gains for both the index.
Absolutely. A very good morning to you, Srishti. And what is very heartening to note is, yes, brand new week, but very handful of losers on the bourses at this point in time. So if you look at it, you have Nifty that's holding on to gains about 120 odd points. You have Nifty Bank moving in tandem with the benchmark indices. As what I can see right now, only 6 stocks are declining on the Nifty as of now. So NTPC is the top loser in the Nifty, down 1.4%. HDFC Bank taking it a bit easy after its earnings. JSW Steel, ITC, Nestle, M&M are trading with mild cuts to say. But talking about the list of gainers then, and yes, that list is pretty vast today. You have BPCL that is among the top gainer on the Nifty at this point in time, 3.7% uptick coming in for BPCL. Eicher Motors, Wipro reacting to his numbers, L&T, Bajaj Finance, all of them seeing healthy gains as of now in excess of about 2% or so. And suffice to say that the advanced decline ratio is very much tilted in the favor of gainers as we speak. Talking about the sectoral indices, then all the sectors are in the positive territory with a mild bit of gains coming in from metal. But you have the PSU Bank Index that is the top gainer sectorally, as well as pharma, and the broader markets are holding on to strong gains, outperforming the benchmark indices once again. So that's the way how the markets are looking like at this point in time. Good trading session coming in for the benchmarks, Srishti, on the first day of the week. But you have a lot of stocks that are reacting on news-based information, isn't it?
Well, yes, and talking about the news-based information, one such stock is GSPL, viewers, because this counter is in focus. As you can see on your screen, GSPL is locked at a lower circuit of 20%. So let's deep dive what happened with GSPL, and other than that, any action that has been taken, what are the implications going ahead as well. For all of these details, we have Somit Sarkar joining us live in the studios. So Somit, take us through what actually happened with GSPL.
Well, the 20% fall that you were talking about is the biggest that we have seen in the last 16 years for GSPL, and this is after PNGRB has reviewed the high pressure pipeline tariffs for the company, and this has been done after a gap of nearly 6 years. Now what they have done here is that they have cut the tariffs by nearly 47% to around 18.1 rupees per MMBTU, and this will be effective from the 1st of May. Now the earlier tariffs were 34 rupees per MMBTU, but the more important part here is that GSPL had asked for a tariff of nearly 50.77 rupees. As against that, PNGRB has approved a tariff of just 18.1 rupees per MMBTU. Now that's a cut of nearly 64% as against what GSPL wanted. Now why has PNGRB given this lower tariffs? Firstly, they are factoring in a lower capital expenditure for the company going forward. They're expecting a capex of nearly 1800 crore rupees as against 3400 crore rupees claimed by GSPL. Apart from that, PNGRB is also forecasting that the operational cost for the company even going forward would be lower for its existing pipelines as well as the newer pipelines. However, the most important part here is the utilization level. Now, PNGRB is expecting higher utilization at close to 87% as compared to 75% proposed by GSPL. Now, because of this high utilization level, the volume expectations is also higher for PNGRB. They stand at close to 31.7 MMSCMD, and as against GSPL's proposed a volume number of close to 26 MMSCMD. Now, because of this volume difference, the prices or the tariff rates have come down sharply for GSPL. However, do remember that PNGRB has kept this clause open that if the actual volume number is lower than the proposed volume number, that they would consider to revise this tariff in the next financial year. But also do remember that the current volume trends are around 31 MMSCMD. So the chances of the volumes getting or the prices getting revised in the next financial year looks less likely if volumes continue to remain at the current level. Now, post this cut, analysts have cut down their target price or say the EPS estimates for FY25 and FY26 for GSPL by at least 30%. And most of the analysts on the street, be it Equirus, CLSA, Citi, for that matter, already has a sell rating. MK, everyone has downgraded their rating on GSPL from a buy or add to sell, and have cut the target price anywhere between 11 to 26%. And that's the reason why we are seeing such kind of a fall when it comes to GSPL.
Yes, news-based information because of which the stock is falling. Also, a brokerage is not supporting coming in. No support from brokerage also coming in for GSPL. But in fact, talking about the news, we spoke to Gajendra Singh, who is the member at the PNGRB, who says that the tariffs will be reviewed in a year. But what are the criteria and what else did he actually have to say of this entire issue? Let's hear out.
Last time this tariff was worked out on 2018, what we declared. That time the capacity GSPL submitted that the volume flow will be 23 MMS CMD. But we considered 26 million and the tariff was worked out and the levelized tariff was 34. Later on what we have seen that volume has raised, the company did excellent. They could reach up to 30 million. We have given this job to the expert agency, that is Engineers India Limited, to carry out the capacity assessment for all the companies. So they did this capacity assessment because number of entry and exit point has increased. So that capacity was worked out at 36 million. So that was also another factor. So if you see that overall, what they are getting, I mean, if there is some surprises, if volume gets declined, what they are saying, then we will review in 1 year. Then we will revise, then we will see other factors also. Through expert agency, we have assessed the capacity. What is going to be the capacity? Now, this capacity has been given to the GAIL also. Now, look, through expert agency, this is the capacity. Now, based on this, now we will ask GAIL to submit their tariff number. Okay. And then public consultation process will be there and then we will work out. So it will take a time. Normally it takes 2-3 months time. So it will be worked out based on that.
Right, so that is the member of PNGRB. And Soumit, actually coming back to you, like you had Gajendra Singh also mention about GAIL. Their proposal also is with PNGRB. But then how is GAIL's proposal different from Gujarat State Petro?
Well, if you see, GAIL is also a transmission company similar to GSPL and their tariffs are also under consideration. Now, how is it different? If you see, GSPL in the past many years was getting an ROC, that is return of capital employed, of around 24% as against the IRR benchmark set by the PNGRB of 12%. And this was because GSPL was getting higher volumes and was also getting higher utilization level. However, GAIL on the other front, their utilization levels have always been lower, around 60% as against 75% considered by GSPL and PNGRB. Apart from that, GAIL's ROCE has also been lower compared to what the benchmark is. It has been around 10 to 11% while the benchmark is around 12% set by PNGRB. So these are the two first different thing which is different for GAIL's case. Secondly, GAIL has asked for a higher tariff on the basis of the fact that the fuel cost is higher for GAIL. Now, if you see GSPL's order, in GSPL's order, PNGRB has actually considered higher fuel costs. So that could be favorable for GAIL given the fact that PNGRB is open to consider higher fuel costs and same has been proposed by GAIL, then that could work in favor of GAIL and in fact the tariffs could be revised on the higher side for GAIL going forward. Now, we still do not know by when the tariff will come in, but PNGRB is giving a timeline of next 2 to 3 months. Now, GAIL is expecting a tariff hike of around 10% only in this point of time, and Citi also, if you see today, has come out with this note where they have maintained their buy rating on GAIL and have hiked the target price to 230 from 200 rupees, and they are also mentioning the same point that PNGRB has considered a higher gas fuel cost for GSPL, which GAIL has also been seeking, which could be actually favorable for GAIL going forward. So that's how GAIL actually stands differently here as compared to GSPL, and what the street is expecting here, that there could be a tariff cut coming in for GAIL also. Why might actually not go that way. In fact, there could be a minimal tariff hike, but not a tariff cut at least for GAIL.
All right, so that is all about GAIL and why that one also is in focus. Thank you so much actually for summing all of this up for our viewers, Soumit, and that was actually quite explanatory in itself, and that is why you have GAIL as well as Gujarat State Petro in focus in today's trading session. But these are not the only counters that are in focus. There is HDFC Bank, isn't it? Because they reported their earnings over the weekend, and once again, stable set of numbers coming in. Asset quality remains stable. The credit cost is slightly lower than the estimates. They are maintaining their commitment towards profitability, as well as if you look at the gross NPA numbers, they are flat on a quarter-on-quarter basis. Net NPA number tad bit higher, like 2 basis points on a quarter-on-quarter basis. So that's HDFC Bank for you, but the stock is under pressure in today's trading session. So let's bring on both Kunal Bothra as well as Ashish Maheshwari to get their views when it comes to HDFC Bank. And Ashish and Kunal, good morning to you. Welcome to a brand new week. And Ashish, brand new week. We expected this time around HDFC Bank stock to perform better, given that once again that they have announced a stable set of numbers. But Street doesn't seem to be enthused. Why?
I think as far as deposit growth is concerned, there is no challenge. Their CASA growth is quite robust. Only thing is that loan growth is a matter of concern. Number one, that loan growth is not forthcoming like how other banks are performing. And I think the synchronization of HDFC with HDFC Bank will affect this for at least 1 or 2 more quarters. So this is one reason that loan growth is worrying investors. And second thing, though profit growth we have seen 37% up, but if you see one-off provision, then again there's some pressure there. Again, if I see how they perform in previous quarter, even this quarter number were not that encouraging, and there's the reason we are seeing this reaction. But going forward, I am optimistic that stock will again start performing because 1 or 2 quarters might be like this. But in long run, as the economy will keep on growing and HDFC Bank, the way they are aggressively entering into MSME and retail segment, I think they will do well. So in my view, 1475 kind of level should be kept in mind for fresh entry into HDFC Bank stock.
Okay, that's the fundamental take coming in on HDFC Bank. But Kunal, coming to you, you have been tracking this counter from the lower levels itself, and just on Friday we have seen what a great move coming in from HDFC Bank. So at this point in time, and post the support, some bit of a support from the earnings as well, what are the next targets that you have on HDFC Bank, and how is this placed on the charts?
So good morning.
Good morning.
I think it's placed very well for itself because, the recovery for HDFC Bank from the February lows, I think 1368.70 approximately was the low for HDFC Bank. From there, I think it's done exceptionally well. For a stock which was beaten down more than 200, 300 points, I think from 1700 levels is where the sell-off started off for HDFC Bank in the month of January. For the stock to recover almost 2/3 of that in a matter of subsequent, next 1 to 2 months, and that in a very stable or gradual manner, I think is a telltale sign that we've probably, seen the worst behind for HDFC Bank in terms of the price moves. Now, what's actually happening is on the daily charts, the stock is trying to attempt a crossover above the 200-day moving average. We had that attempt in the first week of the month of April. The stock failed to cross over those levels, had a dip down of 50-60 points, and then back again from sub 1500 levels. The stock is trying back again to try and break past above the 1550 level. So I believe it's a matter of time that when the stock scales past above this critical moving average, you should see a resumption of strong uptrend for the stock. So far, it's a very good recovery, but that would probably translate into a very strong uptrend going forward once the stock confirms a breakout about 200 DMA.
All right, so that's the view coming in on HDFC Bank from both of our experts. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. And when we come back, we'll start taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on your screen very shortly. Each time you write to us, mention your name, mention the stock that you're looking to invest in, mention that name as well. And if you already purchased that stock, mention the buy price, the quantity, as well as the time horizon. In that way, we will be able to guide your query better to our experts. Talking about the experts, today we have Kunal Bothra on the technicals, while on the fundamentals we have Ashish Maheshwari. Once again, good morning to both of you gentlemen, and let me kickstart taking all of his stock related queries then. And this one is coming in from Veni, who's a senior citizen from Hyderabad. And Kunal, this query is for you. Veni wants to know whether Jupiter Wagons is a good bet to buy and at current price.
Well, it's a good bet to buy, but I'm not sure what's your time horizon which you're looking out for. If it's very short term, By that I mean, say margin of 3 months or 6 months approximately, then you can consider buying the stock, because it looks like that the stock is coming out of a consolidation from a January high of I think 430-35 towards a point when the stock had almost retested the 300 levels. It's recovered quite well. So there could be a possibility that in the next 3 months or 6 months, the stock may at least come back towards the previous highs, and if the market texture is also quite strong, then we may expect a breakout, very marginal breakout above those levels. So it all depends on a time frame. So 425 approximately, 425 to 435 could be kept as a target range.
All right, moving on then, and the next query, Ashish, is coming from a viewer named Kunal, and he's a student at this point in time, 23 years of age, and he's holding Birlasoft. He has already bought 20 shares from a price of 470 rupees. Now he wants to know, is this a good time to move out of this one and rather make an investment in a stock like Jio Financials? And if not Jio Financials, then any other stock that you would like to recommend?
I think this will be a prudent move to move out of the Birlasoft. Again, two reasons for this. First, we are witnessing a lot of selling in US markets for IT companies, and this will keep price checks under of these companies under check for some time. So Birlasoft is a sale number one. Second, I'm not expecting very good set of numbers also in this quarter from this company. The service Geo Financial Services has delivered, and the kind of tie-ups they are able to get on with along with the BlackRock. I think this will keep this stock under more momentum compared to Birlasoft. I'm having 500 rupees target in Geo Financial Services in next 1 year time. So it will be a good move to shift to Geo Financial in nutshell.
All right, this one is coming in from Padmaseva Rao, who's writing to us from Bangalore, and this one is for you, Kunal. Padmaseva Rao has 30 shares of around 30 shares of Arvind Smart Spaces at a price of around 432 rupees per share. She wants to know whether she should go ahead and book profits right now or wait for some more upside for another 6 months or so.
I think you should wait for some more upside. The stock, first of all, is a bit illiquid. But then the recent chart patterns for the stock around the 600, 700 range, I think indicates that the momentum has been quite stable, quite strong. The stock has been making a pattern of higher highs and higher lows. So on the back of the technical structure, it looks attractive, but I am not sure the liquidity aspect. So I think that could be a major concern for the stock in case if there is any kind of a mild correction. But so far it looks attractive. I would suggest a hold.
That's a hold coming in on Arvind Smart Spaces. But Ashish, the next query that I have is on a stock. I'm not sure whether you track this one or not. The name is Hindustan Motors. And Thomas from Chennai wants to know, is there any positive news that is coming on Hindustan Motors, and any analysis on this counter?
If you see, a company is closed for quite some time, and stock has moved on account of some related development. The Tesla is coming into India and they are having land, etc. So only speculation in my view. If you are trading the stock, always keep a stop loss, because you don't know when this news will fizzle out and you will see down circuit in the stocks on again. So once again, you can trade only with the stop loss. And for new investment, I don't have any advice on this.
Coming back to you, Ashish, this one is coming from Indu, and she wants a fundamental view on the chemical and fertilizer sector, and also which would be your top picks for this year in that entire space.
Yes, this is a sector which has not given very good returns if you see in the last 6 months, but after a long phase of consolidation, again some green shoots we can see in some of stocks. So in chemical space, I like specialty chemical stocks like Anupam Rasayan and Balaji Amines. These two stocks will continue to do well because the kind of specialty chemical demand is there for their product. I think they will do well. As well as in fertilizer stock, I like GNFC and GSFC both. In my view, they will do well compared to others because they are having fertilizer as well as specialty chemical. Both businesses are there, but you need to have at least 6 months patience while you buying both these sectors or any stock.
Right, coming to you, Kunal, for the next query. This one is from Mohit from Ludhiana, holding 150 shares of Aptus Value from a price of 347 rupees. His time horizon is for the next 3 years. What to do in this one in the long-term time frame? Do you believe that this has the potential to generate that alpha for him?
Well, it doesn't look like, at least in the last 2 years of charts for Aptus, the stock I think has been struggling to break past about 380, 400. The stock has corrected back towards 240 mark. I think there were two corrections towards 300 levels or sub 300 levels for Aptus. So it doesn't look like a chart which is very exciting unless we see a potential breakout above the 400 level. So I think the catch over here is that if there is any kind of a trigger or event around the stock, which could probably lead to a very quick kind of a breakout above the 400 levels, that could be a point where you may consider buying or holding on to the stock if there's anything anticipated in the next 3 months or so. Other than that, I don't sense any major kind of an up move. I believe that the stock should broadly consolidate into this 300 to 380 odd band. So it's better that you make a switch to some other space.
Okay. Coming back to you actually, Kunal, this one is coming from Subramaniam. He's writing to us from Chennai. He wants to accumulate some more of Federal Bank in his portfolio for the medium term. He already has about 170 shares at an average price of 90.36 rupees per share. He wants to know what sort of a target should he keep in mind for Federal Bank and also add some more?
So I think Federal Bank is the Ashok Leyland of the banking sector, on the private sector banking name, a stock which has a lot of promise, potential, but then surprisingly the stock price doesn't perform as much. So I believe that this 150 mark, 160 band or 170 approximately, this has been a trading band since last so many quarters for Federal Bank. And that's the bigger concern for the stock price. It has a lot of promise potential, but doesn't stand to get into a strong zone of outperformance. I would recommend that if you are looking to make a switch in case, then I would probably recommend City Union Bank as a much more better prospect bank, at least on the charts. And I would probably sense that there should be an up move towards the 175 to 180 mark, potentially in the next 3 to 6 months itself.
All right, that's the take coming in on Federal Bank. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries then. And Ashish, the next query that I have is coming from Shubham from Jammu, and he has bought 900 shares of NHPC, but his buying price is 99 rupees. We have seen a great move in all these PSU names, but for NHPC, do you still believe that there's value as well as from 99 levels, there's return potential?
Yeah, there's some amount of profit taking we have seen from 110 levels in NHPC, and now the stock is getting consolidated in this price range for quite some time. As far as fundamentals are concerned, I'm not that bearish on any of this power stock. I think power is a sector which will continue to do well. Only $1 million question is you should have only right a stock in the portfolio which can outperform compared to others. So, in my view, NHPC is a stock which will give you slow and steady kind of returns. So, instead of this, if you want to take another bet, I suggest that you look at CESC or Torrent Power, which can give you much better return compared to NHPC, because these are the companies which are doing very well as well as stock fund is concerned, and fundamentally are also very strong, and good set of numbers are expected in this quarter. Best bet is CESC.
All right, this next one is coming in from Monish, who's writing for you, Kunal, and he wants to know, with a 3-month perspective, would it be advisable to look at IRFC, SJVN, or even for the matter of fact, KC International?
See, I'm not sure of the immediate next 3 months or so, but then, these stocks are very, strong valued potential, because, these stocks have come back into a decent consolidation. So whether it's SJVN, whether it's IRFC and other stocks, I think what these stocks have exhibited is, a very constant kind of a phenomena. So for 3 months or 4 months period, these stocks, they move into a, very strong uptrend. So from 50 rupees, for example, IRFC moved towards a band of 70-75. Then from 100 plus levels, the stock instantly went towards 170-175 mark. And now it's gone through a time-wise consolidation. My sense is that this time-wise consolidation may probably extend for another 2 months or so. But if you are an individual who wants to hold on to these stocks, buy them at a point when there is too much of, not too much of activity, but too much of value or a strong risk reward, I think then you should look to buy all three of the names. So very bullish on these counters, but I'm not sure whether you can probably expect a decent up move in the next 3 months. But yes, if you give it another 2 years or 3 years, then I believe that there should be a substantial upside for all three of these names.
All right, moving on to the next query then. And Kunal, an FNO query for you. This one is from Nagesh, and he has bought 460 put options of Wipro. He actually didn't share his buy price, so I'm not sure whether he has purchased on Friday or today. But any view on this one? Like, do you believe that this could get in the money, or should he stay put with this?
I think after such a kind of a strong 2-day up move, it's very difficult to try now expect that the stock may come back to that 450, 460 mark, because after 2 days. So what we saw yesterday, that means on Friday, that the stock forming a bullish engulfing pattern, and for the first time I think the last 2 months, the stock has shown a follow through up move. So there was a bullish engulfing pattern in the mid of March for Wipro when the stock was almost at 510, 520 mark, but the stock did not have a follow through. Today the stock has seen a follow through after Friday's pattern, so which means that this is a clear indication of a major bottom, major support in place for Wipro. And I think this time it's better that you reverse your strategy or at least book out.
Ashish, coming to you, this one is coming from Yuvraj, who's writing to us from Bangalore. He wants your views on Centum Electronics. He wants to know if this is a good portfolio stocks for a fresh entry and to be kept in the portfolio for the longer term. Do you track this one by any chance, Centum Electronics?
So earlier I used to, but unfortunately for last 6 months I'm not tracking, so I like to give a pass.
All right, so let me take this next query then. This one is coming in from V. Murli. He's given us a lot of queries that he wants to know, but he wants to know if he can buy Angel One at this current price for the longer term, Ashish, as well as Prestige Estates or CCL products. Among those two, which one do you like?
So instead of Angel One, I'll now like to go with Motilal Oswal Financial Services. I think this is a stock. Now time has come to look into this, and the way returns are given by Angel One, now Motilal Oswal Financial Services outperform Angel One. So this is going to be my pick number one. As far as Prestige Estate is concerned, this is one of my favorite in real estate pack, because the kind of mixed development they are doing with residential, commercial, or industrial real estate, this stock will go to places, and this is going to be, in my view, one of the best performer stock in 2024 also. So both these stock, Motilal Oswal and Prestige Estate, you can add in the portfolio, even though stock are at highs, but still add.
All right, that's the take on Motilal Oswal. But Ashish, any take on TTML? Balaji from Chennai wants to know, can he go ahead and buy TTML at current market price with a 1-year investment horizon? If yes, then any targets price on the same as well?
No, TTML is a stock which has eroded one of the highest wealth of retail investor on account of some stories always. And I'll still like to shy my any investment in Tata Teleservices instead of this. There are various other stocks like even Eximon Technologies, etc., which recently got listed, hold good potential compared to Tata Teleservices, which is incurring losses for quarter over quarter. So it's avoided.
All right, that's the take coming in on TTML. Kunal, coming to you. Ranjit from Gurgaon has written to us. He has Tasty Bites, 10 shares at a price of 1,200 rupees per share. He wants to know whether he should hold on to this particular counter for the next 6 months. What's your take coming on Tasty Bites? The stock has zoomed past those levels. I'm not sure 1,200 is the buy price, but if it is 1,200, then it's been a long-term hold, I think so.
No, I think it should be 12,000. I think that should be a
extra zero
typo error. Yeah, I think that should be the case. But I believe that it doesn't make sense to hold on to the stock, because what's concerning the stock price is in the last 8 months or so, from August highs of 19,500, the stock has been just consistently going into a downward trend. Now there could be an intermittent rally in between, but then looking at the way the stock has gone through a very gradual and consistent kind of a downtrend, it indicates that the major pain is still not out of the stock. The volumes have still been very slow, gradual for Tasty Bites on the way down, which means that there's no panic selling which has yet happened for the stock price. So I don't sense any major uptrend in the making for the stock, and looking at the way the downtrend has shaped up in the last 8 months, I believe that the chances of the stock going lower are pretty much on the higher side. So would suggest an exit.
All right, that's an exit on Tasty Bites. Moving on to the next query that I have, and this one is actually, let me take it through. This one is coming on Praj Industries or Triveni Engineering, wherein Thomas, Kunal wants to know that amongst Praj Industry and Triveni Engineering, which one is a good stock to enter for the long term?
See, in fact, last week itself, I was mentioning that Praj Industries and Balrampur Chini are the two names which I would recommend, because my sense is that both these stocks have gone through a cyclical kind of a correction. So Triveni also, I think, lands back in the very similar kind of a chart prospect, because many of the sugar stocks, sugar ancillary names are showing signs of bottom. Triveni, on the other hand, has also, I think, made a bottom closer to 310, 320 range last month or so, and has now come back to the 350 levels. Compare this with the previous highs of 410 mark. The stock is almost 20% away from its previous major swing highs. So I would recommend buy on both of these names, and possibly if you have few more stocks to be added, I would recommend even Balrampur Chini.
All right, just before we move ahead with the rest of the stocks, just take a look at what GAIL is doing at this point in time. Remember that there is a City note also that's coming on a GAIL, and they are maintaining their buy stance, expecting things to look better for GAIL. You had Samit also explain what exactly is happening with Gujarat State Petro and how GAIL's situation is likely to be different. And the stock has seen a good recovery from the day's lowest point. If you look at the recovery, it's made over 2% recovery from the day's low. That is GAIL India. For you. Watch out for that particular counter. Let's move on then, and let's take this query from Krishna Bharadwaj, who's a senior citizen who's purchased 860 shares of Tata Chemicals at a price of 1,180 rupees per share 15 days ago only, with a one-year view. Kunal, the stock has actually seen a decline. What should Krishna do with this holding? Stay put with it or look to exit? Let's not forget Tata Chemicals has also seen that sharp spike, isn't it?
Well, yeah, but there are two aspects to it. One is I'm very bullish on the chemical space, specialty chemical stocks, but I'm not sure whether Tata Chemicals is one of the best, chart in the entire chemical space, because there are many other names which are looking attractive, have far more potential, and more sustainable uptrend. So, Tata Chemicals, I would probably call it as more of an erratic kind of a trending stock, because it gets into those odd phases of a sudden up move where the stock moves up higher, say by a margin of 10%, 15% in a matter of 1-2 weeks. But then if you time it at the wrong end of the price curve, then you're left holding on to the stock for a long period of time. I think that's the bigger concern for a stock like Tata Chemicals. So on a sector which is very volatile, high beta, I would recommend that you go with stocks which are a bit more stable, because even if you get an opportunity to try and buy at higher levels or get an opportunity to average further, you would net tend to make a lot of money into those kind of stocks. I would recommend SRF to be one of the better names over here. Navin Fluorine is what you can look to add. Gujarat Fluorochemical is also another stock which is looking fairly attractive.
All right, moving on to the next one, and Ashish, your take on Gabriel Limited. A viewer named Gabriel India, I beg your pardon. A viewer named Vaishnavi from Chennai is a long-term investor holding 70 shares, and her buy price is 196 rupees, almost a doubler for her. At this point in time, would you advise to book out profits or continue to hold, and any target price on the same as well?
Gabriel as a stock in auto ancillary has also given very good returns. But again, after touching, I think 440, 50 to be high, stock is under consolidation for quite some time. So, in my view, instead of Gabriel India, where because the performance is quite static, if we see quarter over quarter, when you look at a stock like Sona Comstar, which can give you better return in the same space, because I'm expecting in this quarter also excellent set of number from Sona Comstar. So, you can swap Gabriel with Sona Comstar.
All right, this next one is coming in from the viewer has not mentioned his name. This one is from Yuvraj, writing to us from Chennai, and he wants to know about HBL Power. He has 200 shares at a price of 760 rupees per share. He is actually sitting with a loss, Kunal. What should he do with this particular counter? Should he look to average, exit, or hold?
I think 760 is the buy price you said.
560.
560, okay. So I would recommend a hold for the stock if possible, and if you're looking to maybe time it a bit better, I would suggest that say closer to 430, 440 mark, that could be a 10-20 pointer range which you can keep. for HPL Power. You can look to even average further. So, the stock is showing some classical, strong indications that the long-term trend is getting revived for the stock. From 100, the stock has already gone to 600, but then from 600, the stock has also gone through a correction of 20, 25, 30% so far. So, which means that the stock is not available at a major premium. It's not overbought on the monthly charts. I would suggest that maybe closer to 430, 440 range is where you can look to average.
All right. Coming to you once again, Kunal. This query is from Badri from Bangalore, holding 50 shares of Andhra Sugar. His buy price is 105 rupees. In the short term, any targets to look out for, and what is the short term outlook?
So not one of the best stocks from the sugar pack, but then looking at the short term charts, I would probably expect an attempt or a dash towards 113 to 118 range. I think the critical resistance for Andhra Sugar is around the 118 mark, where the stock had seen some higher jump in volumes, but it failed to cross over above those levels, which means that there was a more of a selling intent for the stock at those 118 odd levels. I would suggest to keep two modest targets, 113, 118, if you're looking at this as a very short term kind of a trading play.
All right, this one's coming from OP Lal, who's a senior citizen writing to us from Bangalore. A couple of queries that he has. One is TVS Logistics, should he continue to hold or look to exit? I'm not sure what's his buy price. And the other one is Wipro as well as Tech Mahindra. He is invested for long term. Does it make sense to stay put with both of them or look to exit? What's your take coming in both of these set of queries? One is Wipro, Tech Mahindra. Makes sense to stay put with these counters for the longer term. Ashish, as well as TVS Logistics. The problem is our viewer has not mentioned the buy price for either of them.
No, actually, I'm not that bullish in Wipro as well as in Tech Mahindra also. Because I think here in IT space, if you want to make good money and don't want to get too much affected by the volatility in earnings, then you need to look and target for the niche players. So, couple of players which I can suggest instead of this will be one Orion Pro Solution. You can have a look, which is into BFSI software, and recently raised money by QIP also. So, this is a player which will continuously keep rewarding its investors. Along with another stock which I particularly like here is again Tata Elxsi, because they are again into automobile, and the kind of innovative work this company is doing will give good returns after whatever consolidation is happening in the stock. So Oriental and Tata Elxsi you can aim to add in your portfolio instead of large cap IT names.
All right, that's the take on the IT counters for today and for the future as well. But with this, viewers, it's time to move into a very short break. Don't go anywhere. We'll be right back.
Healthcare.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's move on and let's take your queries that are pouring in. Actually, this one is coming from Mithu, who's writing to us from Mumbai. Kunal, this one is for you. He's purchased BEL 300 shares at a price of 230 rupees per share. He wants a short-term view, and also he wants to know how much time will it take for BEL to cross that 300 rupees per share mark.
I think that will be a bit of a steep ask for a stock like BEL, because what has actually happened is on the longer term charts, and by that I mean the monthly charts, etc., the stock is now entering into the RSI levels of 88 to 90 plus. So on one hand, what could happen is that the momentum may accelerate for BEL, but with every rise, say of 5%, 10% higher, the stock would keep on getting into an overbought territory. So that will be a risk for the stock in the near to medium term, that if in case the market gets into a correction, these could be the few odd stocks which could also get into a sharper phase of correction. So the odd is a bit 50-50 this time around for a stock like BEL. I would recommend that if you are looking at it, take it as a short-term trading play. Watch out for 5%, 10% kind of swings, and so that helps you keep your stop losses also a bit more tighter, and then try to encash the maximum in this band or in this overbought zone for the stock on the monthly charts.
All right, Ashish, the next query is for you, coming from Krish, and he's holding Phoenix Mills as well as Oberoi Realty in his portfolio. And what he's telling us is that Phoenix Mills has done comparatively well for him. in comparison to Oberoi. Now, should he go ahead and sell part of his investments in Phoenix Mills and add Oberoi Realty at this point?
No, I don't think it will be a good move to sell quality performing stock and buying a stock which has not given you good returns. Because if you see the kind of growth or the kind of new development has been happening in the metro cities where Phoenix is operating, they will have much better returns. And even if you see the stock is just 50, 60 rupees away from 50 to be high. So my target in Phoenix reality is going to be around Phoenix Mail is going to be around 4,000 rupees in next 1 year compared to Oberoi Mall, which is focused more towards the retail play. And in retail sector also in Mumbai now you're having plenty of choices. So in my view, you stay forth with your investment in Phoenix Mail.
All right. Let me take this next query. Actually, this one is coming from Vijay Vishwanathan, who's writing to us from Bangalore. Kunal, I'm not sure if you tracked this one. Mishtan Foods, 5,000 shares at price of 22 rupees per share. He's intending to hold this for 12 months.
No, I don't track the stock, so I'd probably give it a skip.
All right, let me take the next query then. This one is coming in from Lakshmanan, who is a senior citizen. He also has a query on TVS Logistics. He's saying it's not doing that well. Should he keep the allotment with him, or should he switch over to Birlasoft or invest in some other companies altogether? What's your take coming in on this, Kunal? Do you think it makes sense to move out TVS Logistics? Logistics is a company, and shift that money, in fact, to Birlasoft?
So, I think shifting to Birlasoft may not be a best strategy as of now for the stock, but I believe that if you're looking at a parent kind of a bet, then I would probably expect TVS Motor itself to start to be a bit more attractive. The stock, I think, has gone through a correction for itself. So I'm not sure whether the shifting towards Birlasoft at current levels, where the IT stocks are still going through a lot of negative news flow, could be a good strategy. So I'll probably suggest an avoid.
That's an avoid coming in on Birlasoft. But with this, let's kickstart taking all your queries in the rapid fire session. And the first query is for you, Kunal. Short-term targets for Jio Financials. This query is from Ravi Prasad, holding 500 shares at a price of 377 rupees.
I think 400 should be taken out for the stock in terms of the target, but give it at least another 3 to 4 weeks.
Ashish, the stock is JSW Infra. Sambas Shiva Rao has 400 shares at a price of 213 rupees per share. Should he add some more of the stock in his portfolio for the longer term?
Yes, you can go ahead and start at
All right, Ashish, your view on Kotak Mahindra Bank. Shashwati is holding 50 shares at a price of 1,818 rupees. What is the outlook going ahead and any targets?
I am not great fan of Kotak Mahindra Bank. Instead of this, I'll prefer any PSU bank, and you can buy either Canara Bank or Indian Bank instead, which can give you better return.
All right. Vinodini from Chennai has written to us, Kunal, NAM India, average price is around 320 rupees per share. Hold or book profits in this particular stock, and what sort of a target to keep in mind for NAM
I think
India?
you should definitely look to hold on, and potentially I would expect the stock to scale past about the 700-750 mark also. Give it another 12 to 18 months.
Okay, Ashish, Sanjay wants to know your take on Jindal Stainless, holding 3,000 shares at a price of 330 rupees. Should he continue to hold this counter, book partial profits, or exit completely?
This is one of the blue chip in making, and they are having largest capacity of stainless steel in India. So I'll not advise to exit from here. Stay invested.
Coming from Dilesh Joshi from Mumbai, can he look to buy GAIL as well as SML Isuzu for the longer term? What's your take, Ashish?
Yeah, GAIL, a lot of positive reports are already coming. Isuzu is again a good auto play. So both can be bought at this point.
Right, Kunal, Gaurav from Bangalore wants to know, can he enter Adani Power at current market price or wait a little for some dips?
I think wait for some dips.
All right, Ashish, Nalini wants to know about Biocon. Can she look to buy this one for a period of 3 years?
So Biocon, I will go with Celery in the same group, which can give you better.
With this, it's time's up in this edition of the Rapid Fire session as well as on the Buy Now Sell Now show. Thank you so much, Kunal, as well as Ashish, for joining us today and helping all our viewers resolve their stock-related queries. But with this, it's time to wrap this edition. It's a a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.